A stock trading at just $6.05 per share that Northland Capital Markets just raised their price target to $7. But some long-term projections see this going to $14 or even higher. We're talking about an AI infrastructure company that just secured $250 million in funding, partnered with Quantum Computing Incorporated to develop revolutionary 3.2 Tbps optical engines, and received over $5.6 million in initial production orders. This is a company operating at the cutting edge of artificial intelligence connectivity, the optical engines and photonic chips that make AI data centers actually work. With the global market for their technology projected to hit $12 billion by 2030 and major partnerships already in place, this beaten-down tech stock could be one of the most explosive opportunities in the AI infrastructure space right now. But before I reveal which AI technology stock I'm analyzing, if you're new to smart investing, welcome. I specialize in uncovering undervalued stocks and high-growth opportunities in emerging technology sectors. I do the deep research on companies that are building the infrastructure powering the next generation of technology, so you can make informed investment decisions before these stocks go mainstream. If you want to discover more cutting-edge opportunities like this, companies with real technology solving massive problems, make sure you hit that like button and subscribe to Smart Investing. New videos posted regularly covering the best opportunities in tech, AI, and beyond. Now let me show you which AI infrastructure play could be ready to explode. The company I'm analyzing today is POET Technologies Incorporated, trading on NASDAQ under the ticker symbol POET. POET Technologies is a design and development company offering high-speed optical engines, light source products, and custom optical modules specifically for the artificial intelligence systems market and hyperscale data centers. Founded in 1985 and headquartered in Toronto, Canada, POET has developed what they call the POET Optical Interposer, a patented platform that allows the seamless integration of electronic and photonic devices onto a single chip using advanced wafer-level semiconductor manufacturing techniques. Think of them as the company building the high-speed data highways that allow AI systems to communicate at speeds that traditional copper-based connections simply cannot achieve. They serve the data center, telecommunications, 5G interconnect, and sensing markets including LiDAR and medical devices. Here's where POET Technologies becomes incredibly interesting as a high-risk, high-reward AI infrastructure play. The company is positioned at the absolute forefront of optical connectivity for AI, arguably the single biggest bottleneck in AI computing right now. As AI models get larger and more complex, they need faster ways to move data between chips and between data centers. That's exactly what POET's optical engines solve. In November 2025, POET announced a strategic collaboration with Quantum Computing Incorporated to co-develop 400G per lane optical engines capable of 3.2 Tbps data transfer speeds. To put that in perspective, this technology will double the speeds of the fastest networking devices currently available. The global market for 3.2T pluggable and co-packaged optics formats is projected to reach nearly $12 billion by 2030 according to industry research. The company has already demonstrated production-ready technology. They've received over $5.6 million in initial production orders from two key customers for their 800G optical engines. They're one of the few companies demonstrating production-ready 1.6 Tbps transmit optical engines, putting them ahead of many competitors. Major partners include Foxconn Interconnect Technologies and Luxshare Tech, who are developing high-speed solutions for hyperscale data centers with POET's technology at the core. Most importantly, POET just completed a massive $250 million equity financing in late 2025, giving them over $300 million in cash. This eliminates near-term funding concerns and provides the runway to scale manufacturing, complete product development, and capture market share as AI infrastructure spending explodes. Q3 2025 results showed revenue of only $298,434, which was largely non-recurring engineering revenue. The net loss was $9.4 million or 11 cents per share. While these numbers look weak on the surface, the real story is about what's coming. The company secured those initial $5.6 million production orders, which signals the transition from development to actual commercial sales. Management expects revenue to ramp steadily throughout 2026 as production scales. Northland Capital Markets recently raised their price target from $6 to $7, maintaining an outperform rating. The analyst community sees significant upside as POET transitions from a development stage company to a revenue-generating business. The partnership with Quantum Computing Incorporated announced in November is particularly significant because it positions POET for the next generation of 400G per lane technology, which won't be widely available until late 2026 or 2027. Currently trading at $6.05, POET represents a classic high-beta AI infrastructure speculation. The near-term analyst target of $7 represents modest 15% upside, but that's a conservative 12-month view. Some alternative research platforms project the stock could reach $14 by late 2026 if commercialization accelerates as expected. The bull case is straightforward. If POET successfully ramps production in 2026, converts more design wins into revenue, and captures even a small percentage of the rapidly growing optical engine market, this stock could easily reach $10 to $15 over the next 18 to 24 months. The AI infrastructure build-out is a multi-trillion-dollar megatrend, and optical connectivity is absolutely critical to making it work. The bear case is equally important. The company is deeply unprofitable, burning cash on R&D, and faces competition from larger, better-funded players. The recent $250 million financing was necessary but dilutive to existing shareholders. Jim Cramer on CNBC's Mad Money specifically called out POET as losing too much money, which reflects Wall Street's concerns about profitability. There you have it, POET Technologies, a high-risk, high-reward play on AI infrastructure that's either going to be a massive winner or remain stuck in development hell. With $300 million in cash, major partnerships, initial production orders, and exposure to the fastest-growing segment of AI infrastructure, it's worth serious consideration for aggressive growth portfolios. What's your take on POET? Too risky with the losses? Or is this the kind of early-stage AI play that could generate life-changing returns? Drop your thoughts in the comments below. If you found this analysis valuable, smash that like button and subscribe to Smart Investing for more cutting-edge tech opportunities. Remember, this is educational content, not financial advice. Always do your own research. Thanks for watching.